All of you joining us live and the number of you joining us on the replay. Thank you very much for sharing your time with us and joining us for the My Wealth video series. My name is Jeff Hunter. I'm Portfolio Manager with the Townsend, Samani and Hunter Group at CANACCORD GENUITY. Also on the line are our lead investment advisors, Dave Townsend and Raheem Samani. For more information about our team and our My Wealth global portfolios, please check out mywealthmanager.ca. Today's call is with Decibel Cannabis Company's Interim CEO, Cody and CFO, Stuart Boucher. Decibel recently announced their latest quarter, which showed an impressive third straight EBITDA quarter, and that they held the largest market share in both premium flower and concentrate sales, and were number 3 in vape sales in Alberta, BC, Ontario, and Saskatchewan. All participants have been muted, but in the chat below, feel free to direct any questions to us, and we'll do our best to address them in the time permitted. Today's call will be recorded, so make sure that you check your emails in the coming days for the replay information, or follow our Facebook page at facebook.com/mywealthmanager.ca. With that, I'll pass it over to Cody.
Great, Jeff, thank you so much. When it comes to questions, do I need to pay attention or will you watch for questions?
I'll put them forward to you and we'll ask them.
Excellent. Well, thanks, Jeff. By way of introduction, my name is Cody Church. I'm the Interim CEO of Decibel Cannabis, and joining me is Stuart Boucher, our CFO. We're very, very happy to be here, and certainly know that some of you know the story a bit, and some of you the story is new, but we will we'll run through the slides. I think, Stu, you're going to put them up?
Yep, I'll do that. Right.
And as I start, one of the things that's a bit unique, and I want to just address this up front, is the Interim CEO title. I took on the Interim CEO title here in November, late November of 2020, and ultimately that was really a bit of a sad story. Ben Z, and I'll talk a little bit about who Ben was the CEO, and his wife got quite sick. Her kidneys have had some serious deterioration, and she's probably going to need a kidney transplant. And his mother is diagnosed with cancer. So in late November, early December, he needed a little bit more time. I was chairman of the board of Decibel. I stepped in as interim CEO, and then in January, unfortunately, Ben decided to step away for family reasons, and we wish him all the best. Really, the first quarter results, and those were very strong that Jeff mentioned, with $2 million of EBITDA, is the good work of Ben Z. I'm not here to change anything we have started. We're going through an executive search right now with Caldwell Partners, and I will remain on the board and as chairman when I step away and we have a full-time CEO. I want to highlight that the strategy that you're going to hear about today and the entire story is really a continuation. So we do not see any changes from what Ben did in 2020. But if we go to the timeline, I think it's really helpful. We'll talk a little bit about where Decibel was, where it is today, and where we're going. I know some people on this phone call probably remember some of the early days with this company, and so I want to make sure that we level set and kind of talk about it in kind of the 3 stages. A little bit more about myself. I apologize, I should say. I've been in private equity for 25 years. I started a firm called Tri-West Capital in 1997. We were Calgary-based non-oil and gas private equity, really looking for control buyouts. We raised $1.2 billion over 5 funds, 22 years, and bought 41 companies. So I'm an EBITDA guy. I don't understand anything but free cash flow, and I'm really proud of the fact that Decibel has really become a free cash flow generating business with a ton of torque. But if we go back and just a little bit of history, I won't spend a ton of time on this. If you go all the way back to late 2019, there were 2 companies. Westleaf was the old name. Many of you may remember that. Very, very interesting strategy of vertical integration, retail 2.0, and an LP. There was a lot of money raised, and obviously they started building a growing operation in Saskatchewan, what they called the plant, which is for 2.0 products in Calgary, and then had a retail operation. I joined the board in the middle of 2019, and unfortunately that strategy, while very, very aggressive and robust, needed a lot more capital. And we identified that the business needed to adjust its strategy. And with that, we identified a very interesting company to merge with, which is WeGrow. So you see in the top left corner, WeGrow is a small business based out of Creston, BC. They had their own genetics, so very, very specialized cannabis genetics. They had a great growing operation of about 15 to 1,700 kilograms and a premium brand called Quest and Quest Reserve. That's what We Grow brought us. They brought us great grow, great product, and they had a brand that had already been established. They were sold out. So they wanted to have our capacity, which is what we call Thunderchild, our Saskatchewan capacity. And they were very interested in 2.0 products, specifically concentrates and vapes. So we merged the business, as everybody knows on the phone, in late 2019. I became chairman of the board. I was on the board of Westleaf. I became chairman of the board, and we merged the businesses. And that's when Ben Z, who was the CEO of We Grow, took over the entire operation. 2020 would be characterized as a tremendous amount of work and a lot of turnaround efforts. So there was integration, there was a cost realization, probably over $5 million of cost reductions. And more importantly, as we moved into the second quarter, it was finishing the completion of the construction of Thunderchild, our Saskatchewan facility, and then continuing to rotate, excuse me, through the existing operations more in different cultivars. You move into the third quarter, and we had some very, very big events in the turnaround. We've reported our first profitability in the third quarter. As you can see, $860,000 of EBITDA. And we got our 2.0 facility in Calgary licensed. So that was a very, very big event. And then in the fourth quarter, we started selling 2.0 products. So these are concentrates, vapes, those types of products. And we refinanced our debt, taking out ATB and replacing it with First Connect with a fantastic financing that Stu orchestrated right at the end of the year. So 2020 was a very, very big turnaround year, positioning us to basically move into what we call our growth phase. So as you think about the growth phase, we now have a great brand in Quest and Quest Reserve. We're selling a lot of flower and pre-roll. We've got a 2.0 facility that's now up and running and producing revenue. And the final part was our Thunderchild facility got licensed in January of 2021. And so you see in the first quarter, that was a seminal point. That is a torque that is going to offer incredible leverage for this business in terms of EBITDA growth. We also started to really see significant success in our vapes and concentrates. And as Jeff had highlighted, we've had some significant market share in both vapes and concentrates, leading up to a $2 million EBITDA in the first quarter. In addition, First Connect came, and First Connect is First Calgary, our banker, increased our operating line to $7.5 million, which gave us significant room for growth. And we continue to launch a number of new 2.0 products. So if you think about the story is a significant amount of torque in flower because we're going to grow a lot more, and then a very innovative 2.0 strategy. And the two come together because when you start to do high-end connoisseur type concentrates and vapes, you need really good genetics and you need good product to make them out of it. And so that's where this all connects, is that you have to have great genetics and great plants in order to make either great flower, pre-roll, or to make great concentrates. And so that's why we have positioned ourselves, in the final part of this page is, we are the premium and ultra premium leader in Canada for both 2.0 and flower and pre-roll. And we've got the market share to show it. So Stu, let's go to the next page. This is just some pictures. Somebody asked me why we have pot porn on our page. Well, it's really important because we're proud of it. And we're proud of these. These are our products. And if we go from the top right, Point Break, this is a Quest Reserve product that has over 30% THC. Kush Mints is another Quest Reserve that we've been selling for quite some time. Ex-Wife in the middle, that is a cultivar that we have under the Quest brand and is in 25 to 28% THC. All very, very good sellers. But the ones we're most excited about is the two on the left. Stuffed French Toast will be a Quest product that we release in a couple weeks. And Sunset Mac will be a Quest Reserve. They are now listed in Alberta, BC, and Ontario, and we will be rolling those out in the next 2 to 3 weeks. They're going to be massively popular. They tested over 30% THC, so we have to have them retested because they're not sure that the test was right. So these are very, very powerful cultivars. It's exactly what the consumer base is looking for. Stu, we'll go to the next page. Just a few things about us and why we think we're special. I've highlighted a lot of this, so I'll go quickly because we want to get to some of the pages around torque. We are premium flower, vape, and concentrates. We are high end. If you think of it, I want us to be the Grey Goose of cannabis. We're going to be on every shelf. We're going to be in every liquor store, but we are going to be known as the best. Nobody goes and buys a cheap bottle of vodka when you go to somebody's house as a gift. You buy a Grey Goose. That's the same thing for us. We are the premium producer. We are going to have the premium positioning. We have great genetics, and we have a tremendous amount of pricing power right now. We are the most expensive cannabis flower in the market today. Bottom left, significant growth trajectory. We're going to increase our flower production by 4 times. That's in Saskatchewan, what we call Thunderchild. We're launching all these derivative products, which is our 2.0 strategy, and we've demonstrated that we can do that profitably. Our market share, as we mentioned, #1 in the premium flower category. I would also highlight that in all of cannabis in Canada, we have almost 3% market share. We are the 8th largest in Canada from January through to March on market share, not just in premium, in all cannabis. And so we're very proud of the fact that we are 8th. It doesn't sound great, but for a little company like ours, up against the Canopies and the Freas and the Sundials and all the big guys, it's really quite amazing. And then in vapes, we're #3, and that's not something to sneeze at. Vapes came out obviously very early on when legalization happened. We were late to the party, and we have outmaneuvered, out-innovated, and quite frankly, created a higher value product, which has got us to be #3. The best part about the whole story, though, and I want to highlight this, is that guys like Stu and the rest of the team, super great group. I've been around a lot of management teams over the years as a private equity guy. This is a team with stretch. They're entrepreneurs. They work their butts off, and they're really, really capable. They've come from other industries, and they've done a great job here. Next page, Stu. This one is probably the page that we're proudest of, and this is kind of the leading brands in Canada. So if you look at the far left, that is Whistler Medical. It's owned by Aurora. They sell for about $18.71 in terms of average retail sales price, but their volumes are extraordinarily low. As an independent company, Whistler Medical was very, very popular, but unfortunately with Aurora, they've lost some of their verve. Our Quest Reserve is the 2nd most expensive in the country, and we're selling hundreds of kilograms of Quest Reserve. You then see the Rubicon guys with their great products, and obviously G-Tech with Black Market, and then we have Quest, and we're $13.97 on average. So we are more expensive than Experian, than Afria and Supreme's high-end products, and we've been able to consistently get these prices for the last 2 years. So this is really something that's important, because obviously with the kind of costs of a high-end craft grower, we have slightly higher costs. So we need to generate these kind of revenues in order to make substantial EBITDA margins. We'll move to the next page, Stu. This is probably the page that's the simplest, but it's the most important one. So Creston is the bar in the far left. You can see that their annualized production at Creston is 1,932 kilograms. But our Saskatchewan facility, which is Thunderchild, has 7,300 kilograms. It was licensed January 29th. So that means that we were able to take 1 crop in the first quarter and only 10 kilograms. I mean, we're talking a very, very tiny amount went into the first quarter results. So when you look at our first quarter results of 2 million of EBITDA, none of that 7,300 is in it. It is going to start to hit and start to produce additional revenue and EBITDA in the second quarter, but it really starts to hit in the third and the fourth. And the reason is we didn't plant all 20 rooms at once. Every 2 weeks, we plant another room, and we are continuing that very steady and quite frankly, measured growth, because we need to scale the operations to that kind of volume and scale. But by the time we get to the end of 2021, we will be producing at an annualized rate of 9,200 kilograms. Now, my joke, and it's not very funny, but my kids think it is does anybody know how many grams are in a kilogram? It's 1,000. And so when you look at our average price, you can easily get yourself to what the revenue potential is of this business, and that's torque. That is torque. We sold those 1,932 grams at a net price of $8.94. So we've achieved significant pricing in the marketplace, and that's where the torque is in the business. Next page. Just a little bit about genetics. This is the unheard of I guess, asset that companies are starting to talk about. In the early days, I think a lot of cannabis companies just had a few seeds and a couple cultivars and they were done. When WeGrow went and got its license, they had over 100, I think it was, cultivars. And then when we got our Thunderchild Saskatchewan facility, we added another 300. So we now have 400 cultivars. That means 400 unique genetic plants with their own characteristics, their own type of terpenes, their own THC levels. And that is an amazing strategic asset for us. Why? In the cannabis industry, and it took me a while to understand this when I first came on, the consumer wants change. So what we do is with the Quest product, we change it to a new cultivar every 7 to 9, 12 months. On the Quest Reserve, it's 3 to 4 months. We have launched over 20 different types of cannabis, and we retire them and put them away. We are not rotating and saying, we'll come back another day. The consumer wants change, they want newness, and they want to continually try things. And so we've got a genetic library that gives us 20 years of change. And that's before we build a tissue lab, which is in our CapEx for this year in Creston, where we'll be actually starting to create our own genetics and breeding our own genetics. This is the future of cannabis. And if you don't have genetics, you're going to be left at the side, because this is a critical part of the consumer's demand. They want change and they want high quality. Next page, concentrates. So as I said before, there's two parts and two leverage to our business. One is obviously flower and pre-roll, but the next one is concentrates and 2.0. We do not do edibles. We're not heavy into drinks. What we're focused on is vapes, live resins, and concentrates. And those are all elements that we launched here in September of 2019, and we have launched 22 different products. We've launched them in the middle of the market though. So just to be clear, we didn't want to sully or create any issues with our high-end brand of Quest and Quest Reserve. So we started with a new brand called General Admission, and that's where we've launched vapes and concentrates. Concentrates mean shatter and wax. Now that we've perfected and understand what the consumer wants in those products, we are now premiumizing them, meaning we are introducing a new brand, and the new brand is Pressed by Quest. And that is happening right in this month as we speak in June, where we are now taking and going up a notch into higher premium type concentrates. So what is that? What are those higher premium concentrates? Live resins, live rosins, shatters, some live sugars. They call them gems and juice, or there's a number of different names for it. But these are ones that rely on a very, very good cultivar. They rely on a great genetic base, and they ultimately plays exactly to our strength. A vape today that's just a distillate vape, you can take any kind of plant you want, that's any cannabis plant, you can boil it down, take its THC and create a vape. That's not a defensible moat for us. We want to take our great genetics, we want to then take them and make them into concentrates where we will actually be cultivar specific. And so we've done that now in 3 products, and it's been selling extraordinarily well. We have had record case lots of our live sugar and live resin in the last 2 weeks, and that's where we're moving to. Now, here is the beauty of the whole thing, and I just want to finish the strategy part. You saw on the last page that we've got a dramatic increase in flower volume, and you see in this page that we're using our genetics to produce concentrates. This is what gives us the flexibility so that we will maintain price. We are going to balance the market so we produce enough flower to satisfy demand in Ontario, BC, Alberta, and Quebec, but we're also going to direct some of that flower over to the concentrates, and we're going to balance the market. What so many different cannabis companies done is they've overgrown and they've created way too much product, and they haven't been able to sell it. We're not going to be in that position because we're going to take some of our plants and some of our cannabis and move it into concentrates. And that is really about a 5 to 7 to 1 in terms of grams to a concentrate. So you lose quite a bit of volume, but we will make it with price. So that's part of what I like to think of as the downside protection for the company, is that we're going to be able to utilize our product, and we're never going to be long and have too much product that ultimately can't sell. Next page, Stu. And this is where you jump in.
Yeah, thanks, Cody. So getting into market share, as Cody mentioned, we have a top 3 position in all 3 categories we compete in. So we have 8.5% market share in premium flower, and we're number 1. In concentrates, we have a 22% market share, and we're number 1 as well. And then in vapes, highly competitive category, but we're number 3 and growing. And most recent quarter, we were 10%. So looking at all 3 of these categories, we're really excited with what we're going to be bringing to the table over the next 4 quarters with new production coming in or new products coming out, but also in the growth potential in these categories as tailwinds to our business. So looking at premium flower first, that's where we have Quest and Quest Reserve Living. We're going to be bringing forward an additional brand that's kind of the subcategory to Quest, like a Johnny Walker in Q4. And that market we're extremely excited about because consumers are starting to recognize that if you pay a little extra, you're going to get a much superior experience than buying grass clippings and saving the extra few bucks. You can smoke much less of our product and get a much better experience than going out and buying some of the value or discount products. So we're seeing consumers transition into this market, as well as seeing black market consumers who want that better experience and higher quality product and ultimately want to support craft come into this segment. And that's where we're seeing it grow. We've been very supply constrained from a production standpoint, as Cody mentioned. And so we're constantly having conversations as an executive team, discussing issues about being out of stock in provinces. So that's where we're most excited. It's being able to bring additional choice through the additional rooms that we can create new products in, being able to supply the market adequately for the first time in this company's life cycle, and then being able to enter new provinces. So we've been relatively tight in terms of the provinces we're currently in, because we struggle just on that front alone to supply them all. So being able to enter the Quebecs, some of the eastern provinces, and get a full nationwide assortment of Quest products on shelf gets us really excited. Looking at concentrates and vapes, both of these are very high growth categories because they're brand new. They were launched a little over a year ago. And we like to look to the US as to how these markets are going to evolve. So concentrates in Canada today represent about 3 or 4% of the overall Canadian market. Looking down to the US, they're 12 to 15%, and they're continuing to grow at a very fast pace. So we're really excited as this starts to build out. We see new consumers come to the table in this segment, and we have a great position today, but we have a lot of unique and high quality products to bring to the table. As Cody mentioned, this is a market share where we've just brought shatter and wax, and we just recently launched a live sugar, but it's not reflected in our Q1 market share. So as this category continues to grow, we're going to be continuing to bring new products to the table and launching our premium concentrate brand, Pressed by Quest, in this quarter. Looking at vapes, it's a very similar story. So it's 12 to 13% of the Canadian market. In the US, it's anywhere from 15 to 20. And so we're launching, again, a bunch of brand new products over the next couple months. We got a live resin vape that just came to market, and the rate of sale has been tremendous. Feedback incredibly positive. And that one tested at 26% terpenes. So that's what's really getting consumers excited about our products. So it's a very similar story to the other 2 markets I've spoken to. Both are continuing to get that tailwind of growth, and we're continuing to bring new products to market to capture additional market share. So getting into our financial results, and I think this dovetails really nicely with the timeline that Cody laid out before. So there was a lot of work that went on in 2020 to build a really strong base and platform for this business to grow and continue to drive profitability. So in 2020, that was kind of the turnaround area where you see us transition from negative adjusted EBITDA to positive. And now we're starting to hit that inflection point with these 2 growth initiatives we have coming this year. So in the most recent quarter, we did 12.6 million of revenue and 2 million of adjusted EBITDA, but we got a lot left in the tank. So that only reflects 10 kilograms of Thunderchild production, we're still early on in that growth curve. So we're planting rooms every 2 weeks as we speak. And really where that starts to compound and make a massive difference is in Q3 and Q4, where we go from harvesting 1 room a month to harvesting 8 rooms a month. And to kind of qualify that, that's about 50 to 60 kilograms per room that we're harvesting. So it's very impactful in terms of getting that supply out to market and continuing to grow our top line. In a similar fashion, we had 22 SKUs in market for Q1. We've launched another handful of products, so live resin, live sugar, and another distillate vape in Q2, all receiving really good consumer adoption. But we got a lot left in the pipeline. So our innovation team is constantly looking for white space. They got a number of really exciting products coming down the pipe in the next 3 to 6 months. Some of them really get me excited. Others scare me because of how high THC they are and how specific they are to the connoisseur. But all of them we're really excited to bring to market. And that's going to be another big growth driver for us as we start to go through this premiumization strategy, creating defensibility that we've created in flower and carrying that over into the 2.0 categories, and continuing to see these markets expand as the cannabis market as a whole grows. So doing a bit of a deeper dive into our Q1 results, because these were pretty recent, we're very proud of them. And frankly, it was in a unique period where it makes it very comparable. So the industry went through a few challenges. One being provincial boards, who are our main customer. They act as kind of the middleman between us and the retailer. Wanted to clean up their balance sheets for their year-end reporting. So March 31st being their year-end. So they recognized that they were starting to take on too many products, some of which aren't moving and are leaving them with the financial burden. So over the course of this quarter, they went through a rationalization and started to bring down inventories. Separately, what we saw is Ontario had a number of challenges with COVID, which resulted in store closures, a big decline in provincial sales, and ultimately resulted in the board not ordering. So those two collective things made a very unique situation. What we saw was a bloodbath in terms of financial performance from quite a few. And ultimately having that consumer demand, your market share, and the pull through that you get from consumers going in, picking your product off the shelf and buying it, led to those who had strong results, which again is why we really want to talk about these. We grew our wholesale revenue by about 22%. Overall, on a consolidated basis, it was about 11% growth from our fourth quarter and 150% growth from a year-over-year standpoint. So this is what gets us really excited. Again, no Thunderchild included in this, no new products. And so we're excited as we go through the rest of this year to roll those out. But we think we're doing a lot to really drive value and demonstrate the importance of having that high quality product and consumer demand. And frankly, it shows through our margins. We had 44% gross margin on an adjusted basis. We had 28% SG&A, which we're going to continue to drive down as we bring on Thunderchild and as we launch these new products. So I think an important thing to note in Q1, we had a lot of drag from SG&A with our Thunderchild facility. That was about $300,000, but we only sold 10 kilograms. So when you get that facility fully up and running, we're expecting our SG&A to decline substantially as a proportion of revenue. And then looking at our adjusted EBITDA margin, which kind of flows through from those two ratios, adjusted EBITDA is starting to actually demonstrate the strength of having premium products. So most recent quarter, we were 16%, and we're continuing to focus on how do we drive growth in those numbers as we drive overall growth in the business. Speaking to some of the operational developments and how we're delivering on our strategy. So Q1 was really the platform where we needed to kind of put in the foundation. So that's doing a bunch of R&D work for our 2.0 products, getting a bunch of plants in the ground at our Thunderchild facility. And so in April and May, you really see the results of all of the labor put in Q1. So Thunderchild, again, didn't contribute major revenue, but ultimately we're 40% of the way there. So that means we have 8 out of 20 grow rooms planted. We're starting to hit that inflection point where we are harvesting 2 rooms a month and going to 4 and then 8 really quickly. And all of the products looking good. So our first product out of Thunderchild tested at 26% THC. Some of these new crops that we're bringing, Sunset Mac and Stuffed French Toast, we're testing north of 30. And to the point where we got to retest them, because anytime we're north of 30, we want to be confident. And we've delivered a ton of product north of 30%. So, we think that this facility is delivering the quality that we expect, and we want to put into Quest jars that the Creston facility has been able to deliver so far. Looking at 2.0 products, we brought live sugar, a live resin vape, and another distillate vape to market, and the feedback has been amazing. So we've seen quick reorders on kind of all of the provinces that we've launched this product in. Both products are in the top 10 for SKU set in the most recent month. Our live sugar top 5, our live resin vape top 10, and they're doing tremendously well. So we're really confident in what we've been able to do so far, and it really validating our strategy going forward. And so we're just focusing on heads down execution and continuing to roll out this plan over the next 6 and 9 months. Hey, Cody, you're on mute.
Great, thanks. One of the things that I think is really important for everybody is this is a really accomplished team. It's got a smattering of experience. It's got youthful exuberance and some really good experience in other industries. Obviously, Stuart in the far left is an investment banker, brings a lot of financial and market acumen. Adam Coates is our man who sells the weeds. So he is our key chief growth officer and comes out of the beer industry. So very, very well trained in that, the art of sales. Chris Newell comes out of a retail chain. He ran a number of retail locations and ultimately is what we call our COO. He runs the 2 grow operations in our plant. Ed Chu is our consultant. So he is our grower, our chief grower, and has brought this tremendous genetics to our business and has done a great job in increasing productivity, as Stu said, but also in our minds, growing some of the most consistent commercial craft cannabis in the country. Gary, our chief compliance officer, is phenomenal. He is soon to retire, but he was one of AFRIA's first employees, so brings a lot of experience to us, and he'll continue to consult. Derek Sider, former CFO of the WeGrow business, now is our chief people person, and so we need to correct his title. And Warren Metzel is our VP Innovation, who's really come up with a number of these great new products in the concentrate side, largely very focused on the US market and then trying to transition into what can work within the Health Canada rules, because not all the products in the US are transferable for a whole host of regulatory and, quite frankly, just Health Canada related rules. So we'll move to the next page.
Sure, and I'll just take over on this section and try to get through it really quick so we have adequate time for questions. But we like to view our business in 3 distinct segments. So one being our flower production, our second being concentrate and vape manufacturing, and then third being really our consumer knowledge, which is our retail. So we have 2 cultivation facilities, one called the Quest Estate. So this is really where the brand came to life. This is out in Creston, BC. It's an indoor craft designed cultivation facility capable of growing really high quality product. So it gives us that precise control. It's licensed, operational, and it's fully run rate at this time. Then the growth wedge within our business is our Thunderchild facility. So this is out in Battleford, Saskatchewan. It just got licensed in January, and that's the one we've really been trying to emphasize as the asset to watch over the next year. That's where we're going from 0 to 7,300 kilograms of sellable product. But it's really unique in that it's indoor and it's well designed. So it was really focused for craft at scale. It mirrors a number of attributes and actually beats a few attributes from our Creston facility. in terms of the control and precision surrounding the environment, feeding, watering, all of those things that make a quality and craft cannabis plant. So that's where we're really excited. That's where we're focusing a large part of our effort and really trying to execute over the next 9 months and getting that facility full production. Looking at our extraction facility, which we coined the plant. So this is licensed and operational. This is where all of our 2.0 products come out of. So our blend craft concentrates right now are general admission vapes and soon to be our Press by Quest products in both categories. So it's 60,000 square feet. Right now we're utilizing about 15,000. So it gives us ample room for expansion. And in addition, we're going to be using this as a central hub. So I'll get into that in a moment as to the value that creates. But that facility is really the cornerstone for our wholesale product lines. And so we're really excited about that as well. And then lastly, it's a bit more non-core, but it brings cash flow and it brings strategic value. It's our 6 retail assets. So this is something that came from the Westleaf days. And we've been able to find a number of purposes for it, predominantly in supporting our wholesale efforts. So if we can create a better product, we can understand the consumer better. It leads to a more successful business. And so that is where those assets really come into play and tie in the full package with Decibel. So just covering the assets really quickly. So this is a picture of our drying room in Creston. I believe this is Kush mints on the racks currently drying. So I've covered a lot of things about this. I think the most important thing to highlight about this facility, again, is the small grow rooms being able to create choice. So it allows us to plant different genetics in each room, being able to control precisely the quality of product and use kind of our unique knowledge that Ed and team have built to create those products and bring them to market. And then also how we're going to continue to build this facility going forward. So Cody mentioned this early on when kind of highlighting the importance of genetics. And that's where we're focused on creating a tissue culture lab. So it has a number of benefits in creating consistency in products, quality. So it reduces a lot of the variance and ultimately consumers get something that's consistent and they're used to. But it also allows us to do kind of highly scientific processes that I think Gary would probably be better to speak to, but it's called protoplasm fusion. And that allows us to accelerate the breeding process between plants. So we can create unique genetics that we have IP protection over and breeders' rights. And so that continues to refine and build that competitive strategy that we're focused on, with one point of differentiation being genetics. So that's what we're excited about, and that's where we're focused this year with this facility. Moving on to Thunderchild. Again, this is a flowering room from our facility. This is actually our first crop, which was Mac 1. And so visiting that was really exciting. I was there last week and the facility is really ramping up well. We got 2 additional harvests coming down in the next 3 weeks. So one being Stuffed French Toast, one being Sunset Mac. Both are the second harvest of each of those products. So we're bringing them to market really quick. And this facility, again, I won't spend much time on it, but is really that growth piece where we're excited about it. It gives us another 20 grow rooms in our arsenal. So when we're looking at how do we create choice, how do we build on this rotation strategy, well, this facility does all of that. So now we can deploy more cultivars to market. We can bring more newness and we can rotate at a quicker pace. So we're continuing to engage the consumer and get them excited about Quest. Then moving to our extraction facility. So this is where the 22 product SKUs we have in market come out of. We got another 7 that came into market in Q2, and we're looking to roll out a total of 30 over the course of this year. So simple math, we got 23 products ready for launch in the next 6 months that we're bringing to market. Very excited. So that'll be products like a live cold cure batter, very top-notch connoisseur product. We got additional live resin vapes. We got Gems and Juice, which is our version of a diamonds and sauce. We're looking at diamonds and a few other kind of niche but connoisseur products that we're excited about, excited to bring to market, and think the consumers are going to really respond well to our focus on quality and being competitive at a given price point. Where we see this facility kind of changing over the next couple quarters is we're investing in a processing hub. So we're trying to cohabitate all of our processing and packaging for flower, really benefit from economies of scale, and look to bring in some equipment so that we're not looking to outsource any sort of trimming or other processes to third parties. For us to be a true premium operator, we want everything internal. We want full purview and control over what we're putting out. And so we've done most of that in large part, but we need a bit of an expansion in the next 3-4 months. So we're just undertaking that now so we can bring it in fully and accommodate some of this new volume coming to market with our Thunderchild facility. And then lastly, our retail stores. So where this gets really unique is we have 3 retail in Saskatchewan and 3 in Alberta. This is all under the Prairie Records label. And so this is unique because Saskatchewan's one of the only markets that allow you to ship direct to a retailer. You don't need to go through a provincial board. So when we have new products like our concentrates or our vapes, where we've gotten Health Canada approval, we like to bring those to Saskatchewan first, launch them in our stores. We have a 25,000 customer email list. We can have our sales associates directly interact with our with customers within the store. And so we can garner direct feedback in real time on our products. And we can take all that feedback to our innovation team, tweak or refine the products, how consumers kind of responded to it. And ultimately, when we do a nationwide launch, it's that much more successful. So that's really how these tie in beyond the branding tools that it creates and the cash flow that it brings into the business. So Cody, if you want to take the board, and then I can wrap it up with our cap table.
You bet. So what you would have noticed is that we have a kind of unique situation with only 3 board members, and that's a very, very simple thing. Dr. Ivan Castleman and Billy Yellowhead. Dr. Ivan Castleman is a true scientist with a long history in cannabis. Billy Yellowhead is a councilman from the First Nation of Thunderchild. They were put on the board in November of 2020 at our AGM, and unfortunately that didn't give Health Canada enough time to approve them for security clearance. So in order to get our Thunderchild facility Health Canada approval, we needed to have them step off. Their advisors, they'll join the board when they get their Health Canada security clearance. Obviously, I'm chairman of the board. Mike Kelly is the CFO of Step Energy. He's the head of our audit committee, fantastic individual with lots of experience in the public markets. And Paul Wilson, who chairs our governance committee, is a former CEO of Mark's Work Warehouse and a great operator. So we feel like we've got a really solid board. We will absolutely be adding a woman as soon as we can kind of get Dr. Ivan Castleman and Billy Yellowhead through security clearance. We need and would acknowledge that there's diversity that needs to be added to our board. And we feel that at least half of our customers are women, so we should absolutely have a better perspective and a better balance.
Okay, and I'll just wrap it up so we can get to Q&A on the business. But from a capitalization standpoint, we have about 350 million basic shares, available liquidity of 7.2 million, and current debt of about 41 million. So the thing I really like to highlight is the fact that we're focused on optimizing our capital structure. So we have a highly supportive lender. I think we have the best industry terms on our senior debt. So our term debt, we have 4.75% interest. That's with a 5-year term. So we don't have to worry about repaying it or looking to extend that maturity for at least 4 years in our business. And we have a 10-year amortization cycle. So we really get to focus on deploying as much capital to growing our business rather than early repayment of debt. On top of that, 16 million of that debt has an interest-only period out to the middle of Q3, and that's designed to allow us to invest more fulsome into our Thunderchild facility and get it fully operational. More recently, we had a $1.5 million operating line tied to receivables. That's been upsized to $7.5 million. So that's bringing in additional liquidity, really supporting some of these product launches we're bringing forward. And that carries an interest rate of a little less than 3.5%. So it's really cheap. It's a covenant light structure within our facility with our lender Connect First. And so it's been great having them as a partner, and really excited to have their support as we continue to grow this business and continue to drive value. In addition to that, we have convertible debentures. So we're not losing sight of that. They have a conversion price of 45 cents, 9.5% coupon, paid semi-annually, and they're due May of next year. So that's something where we're really comfortable with waiting to repay them out of cash flow. But we're looking for ways to address that overhang earlier on without creating a highly dilutive situation. So we're really focused on minimizing the dilution on these notes and addressing them in the next 3 quarters.
Great. So Jeff, I see there's a few questions. Do you want me to just run through the questions and I can answer them kind of one after another?
Yeah, that'd be easy as well. Yeah.
Perfect. Well, for Donna, I apologize that the light wasn't very good, but I'm attached to my computer here and I couldn't really move, so I apologize. Next question, is there any appetite for buyouts of other small craft private businesses? The answer to that is potentially. We believe that there is going to be not only consolidation in cannabis, but consolidation on the premium and the ultra premium. I think where it gets difficult is on the micros. So the micros, which are limited to about 500 or 600 kilograms, very hard to think about how they can really manage and be efficient and profitable. But we may rep some micros through our sales organization. So that's an area that's possible. Is the Thunderchild Saskatchewan facility on Indigenous land? If so, what's the relationship? It is not on reserve land. It's actually owned. The land that we're on is an industrial park owned by the Thunderchild Nation. It's not formally designated as reserve, so we're subject to excise tax and whatnot. The relationship with the Thunderchild is really, really powerful, and it's a very strong one. We have obviously one board member from Thunderchild Nation, but we also make it a very big emphasis to hire as many Indigenous people in our Thunderchild facility as possible. There are 3 large First Nations in the area, and we've really made that a focus. And we think that we can create significant and dramatic job opportunities in the Battleford area for them. Next one, what is your vision of the retail space in the future? What will corporate landscape look like? So, as I think Stu highlighted, the retail operations are profitable. They're a very nice 6-story unit. We're not allocating capital to retail at this point. It is profitable, but it's just not as profitable or as good ROI as our concentrates and our flower. If at some point in time we find that the retail becomes too big a distraction, or for that matter, does not perform well, we will probably divest. But right now it offers us a great window into the consumer. It allows us to ship directly to Saskatchewan. It's the only province where you can do that, where you ship directly to the stores. And so we actually are able to do some really interesting market research. Next one, it appears retail isn't core anymore. So through who, how is the product getting to the retail market? So great question. What we ultimately do is we sell to the different distributors in each of the provinces. So AGLC in Alberta, BC, OCS in Ontario. They then turn around and sell to the many, many, many thousands of dispensaries across the country. And so we have a penetration in probably Alberta and Alberta and BC that's maybe 40-50% of the stores. That's part of our growth opportunity. In Ontario, we are underrepresented, but we've hired 3 salespeople in Ontario in the last 3 months, and that is going to be the great battleground for cannabis. Cannabis is obviously it's a consumer-driven product, so population is key. Ontario, with the largest population base in Canada, is going to be an absolute key market for us, and we're making that a big, big focus. There are 40 to 50 stores a week opening in Ontario right now because they've opened the market up wide. Of course, they're under COVID restrictions, so it makes it difficult, but there is a substantial number of stores opening in the Ontario market. Those are the questions that I see, Jeff. Happy to field any others.
Couple other ones. Aurora is one that has mentioned that they want to focus more on the premium market. There's some different things about growing premium at higher levels. What are some of the safeguards that you guys have as a company protecting your market share and growing your market share versus others that are maybe a little bit more newer to the to focus on premium?
Right. So the really interesting thing about premium and ultra premium is it takes three things. It takes genetics, it takes the right physical assets, and it takes knowledge. So genetics we have 400, they're ours, and we have license to those. Our facilities are small rooms and focused on handcrafting, hand cutting, and being very, very what we call craft. And then the third thing is we've got some exceptional growers, and Ed is our master grower. The challenge that an Aurora has, or other large players, is their facilities are too big. They have limited genetics, and they don't have people who have the experience to take craft at commercial scale. There's lots of people who can grow a marijuana plant and a cannabis plant and make a very nice example out of one plant. But to take 400 in a small room and make them produce very, very good product is difficult. To make them produce in a 100,000 square foot room is impossible. There's too many microclimates, and it just is not possible under science today. So we think that we have a lot of defensibility: knowledge, genetics, and facilities. And the brand name that ultimately is now been around for almost 3 years and is what we would say the leading premium brand name in the country today.
Yeah, I would add a couple points to that. So as Cody just kind of mentioned in terms of brand, so it's really about being able to deliver a high quality product at a good price and doing that for a long period of time. So we're one of the longest premium products or premium brands in market today. And I think consumers really recognize that, and it resonates that every time they go to Quest, they know they can get a high quality product. It's really challenging to find a case study within the CPG industries, even looking to other mature markets, of a discount or a value brand being able to move back and pull itself up to premium or higher. And so that's really the challenge I think some of these larger LPs will face. They've provided lower quality product at a very discounted price point, and it's just challenging to get the consumer to buy into that then being re-recognized as high quality. And then also there's some of the challenges that we face with provinces. So there's a limitation on how many products they're going to list. Again, it's building that relationship and demonstrating your ability to sell and get consumer excitement about your products. So when the province is then looking at whose product is being brought to market, well, the existing premium players are going to be given priority. In a similar fashion, some of these larger LPs will be treated as discount just because of the assortment they already have.
So you guys have been the leaders in premium, and you have a ton of genetics behind your name. Does that increase opportunities to expand your product globally? What are restrictions, opportunities there? And is that something that you guys are pursuing, or is it just focusing on the Canadian markets at the moment?
Yeah, so Jeff, right now we are not entertaining any international opportunities because the opportunity in front of us is so much that we really have to focus on executing that massive growth curve in volume at the Thunderchild facility, and then launching all these new 2.0 products. I think in the long term, brands are transferable. We have BC Bud. I mean, it is famous around North America. And I think that if the North American market becomes open, that we'll be able to take the Quest and the Quest Reserve brand to pockets of the United States, because we've got a great reputation. But right now, the next 6 to 12 months is 100% focused on execution and taking our assets and making them as profitable as possible.
With the company valuation where it is, and with all this growth ahead of you, and the obstacles seems to be mostly behind you, what protects shareholders' longer term value to participate in this growth from other acquirers?
Well, it's a great point. Jeff, I would say this. I'd say that we are working extraordinarily hard to try and make sure that the marketplace is aware of our story. We hope to get some research from a couple different investment banks soon. We definitely know that there are industry players who have noticed us because as we've come into the market share that we have, but we have a very loyal, dedicated shareholder base. And we've been very open in talking to them that we think that there is substantial opportunities. If you look at the comps, and obviously we don't have research, so that's a very important thing so people can look like to like and forward looking. We think we are substantially undervalued at 30 cents. You know, and insiders have continued to buy. We like the stock in the sense that we can see not only comps in the premium side, but even some of the transactions that have happened recently. Redecan with Hexo getting taken out at a substantial premium in terms of multiple of revenue. Hexo taking out 48 North, and then obviously Canopy taking out Supreme have given us some transaction lines that show that under any way you want to compare it, our stock is really undervalued. So we're out there talking to as many of our investors like you and people who know the story, because we want to make sure that we protect ourselves and get full value. It's incredibly important to me and the rest of the board that we get full value for this business if it ever ended up that we transacted.
Perfect. I think we just have one last one, and then we'll let you guys go from here. How much digital social media are you doing, and word of mouth and other means of promotion on your?
So that's a great question. It's a very tricky one because, as everybody knows, there are restrictions on advertising and marketing within cannabis. This is where your grower is important. So Ed has a very, very vibrant Instagram page. He's very prolific. We work very hard to try and find areas and cracks within the marketplace. We definitely have an Instagram account, and we certainly are on LinkedIn. But the single best way to build the brand is with the bud tenders. So that's why we have a direct sales force. Stu, we got 10, 12 direct salespeople?
Yeah, I think we're at 10 right now, going to 12 to 15 in the next few months.
And so what research has shown is about 85% of every cannabis purchase is influenced by the bud tender. So if we can get the bud tender to think of our product as the Grey Goose, as the Johnny Walker Blue, that bud tender is our advertiser. That person is the one who, when you come in and say, I've got a friend, he loves cannabis, she loves cannabis, I want to buy him the best. The bud tender says, well, then you're going to go get Quest Reserve. And so it's hand-to-hand battles. It's at the storefront. It's what one of the things that's really hurt us with COVID is you can't go in and see the bud tenders. You can't see the management of the stores because such limited amount of people can be in the stores. So we really think that there's a lot of work to be done at the storefront. That's how you get your brand built. And the social media helps and the buzz helps. And there's a tremendous amount of people who love to talk about our products on social media. So we follow that very closely because you don't know what the customer thinks until you get on social media and you watch. And they are unequivocally honest about what they think about your product. And you got to watch that very closely.
Well, Cody, Stuart, really appreciate you taking the time and spending it with us and walking through Decibel and all the growth that you've had recently and success on your market share. Look forward to following your story further. And for everyone else on the call, just check your email in the coming days, and we'll forward off the replay video of this and a copy of the presentation. Or you can check out our Facebook page at facebook.com/mywealthmanager.ca. Perfect, and have a great day.
Jeff, thank you very much. I really appreciate it. Thanks.
Thanks.
Bye-bye.
Bye.
Thanks, Stuart.